Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Welcome to Saving with Silverman, starring Mark Silverman of Silverman & Associates. Mark, of course, is your certified financial planner professional, the president of Silverman & Associates. Always happy to be on this radio show and reach new folks every week. Of course, if you're a regular listener, we certainly appreciate you too. And for those of you who are maybe tuning in for the very first time, welcome to the show. I think you'll learn a lot just by hearing Mark talk about these issues. But the best thing to do is to come in and have a conversation with Mark face-to-face. 520-333-7601. You can call or text if you're more comfortable doing that. 520-333-7601. Call and get on the calendar and come in for that conversation. No obligation and no cost at all. 520-333-7601. Mark, glad to be with you again. I hope you've had an outstanding week.
So far, so good, Ron. It's been a few weeks since we spoke. How are you?
Just great, and looking forward to doing the show today. And I know that there are a lot of people out there listening today who are going to be reached by one thing or another that you say, and maybe they've been procrastinating and putting it off and thinking about calling you, and perhaps today will be the day that they actually reach out and get in touch. Let's talk about facing reality. A lot of people have problems doing that. The realities of retirement planning are different than they were even a decade ago. Things are changing all the time. Let's talk about some of the realities that affect how you need to plan. First of all, one thing that has changed dramatically over the years, certainly from one generation to the next, people are just living longer these days, and that makes retirement planning actually a lot more complicated.
It really does. And, people are living longer, so we have to plan for a longer life expectancy. And in a lot of cases, a longer retirement, too, because we do see people retiring earlier as well, if you're fortunate enough to do that. So, in some cases, we're planning a retirement of 30, even up to 40 years, so people are having a retirement as long as they had a working career, which is great. But you have to have enough money and an increasing income to cover all the expenses and things that are going to come your way throughout your life. So, life expectancy is a big thing. I know the plans that we run for a lot of people these days, we're running them into their 90s. And in some cases, if there's a lot of longevity in the family, we have a few people we've run the plan for up to age 100. So, we just want to make sure that there's going to be enough money there if you happen to live that long or if your spouse lives that long. And, if you plan on not having a long life and you're short and you end up still being alive and you weren't planning on it, obviously there's going to be problems with that sort of thing. So we just want to make sure that there's going to be enough money to do all the things that you need to do and have to do throughout your life.
Well, certainly nobody wants to lie awake at night wondering if they're going to outlive their money. And I know that you can relieve that bit of stress for folks, and you can have peace of mind in your retirement years. But get in touch with Mark Silverman and have a conversation about your situation. Everybody's different. Retirement is now a very active stage of life. I think gone are the days when people retired and then just sat on the front porch all day watching the cars go by. There's a lot of stuff that people do these days, right, Mark?
That is very true, Ron. I mean, this is and retirement. It's only been around the last couple generations. And, prior to that, people just worked until they died. I mean, in reality, there was no such thing as retirement. You worked your whole life and then you died. And so now, people are really thinking about what they want to do in retirement, or maybe they're going to do something. Some people don't even want to retire. And I certainly understand that, too, where maybe they want to slow down and what we call work optional lifestyle, which means working because you want to, not because you have to. And so that retirement could look like maybe you're going to do something different entirely. Maybe you're going to cut back your hours. Maybe you're going to retire fully and just, travel, go cross country, travel the world, whatever it might be. But people are having more of an active lifestyle, like you said. It's, whether it's playing tennis, golf, pickleball, whatever it might be, doing those sorts of things and being active. Because I know my most successful retired clients are the ones that have a plan, meaning that they're not only a financial plan, but a plan what they're going to do in retirement, meaning that they're going to be active or what they're going to spend money on in retirement or travel or whatever they might end up doing. And so that's really what you need to think about when you are going to be retiring, so we can put a budget together as far as how much money you may need in retirement. We'll help you with the cost of healthcare and those sorts of things. But As I've said before, Ron, you've heard me say this before, we can put a plan together for your money, but you need to put a plan together for your time. And I find too many people don't do that.
Mark, let me ask you a question that may be a little off the wall as far as our financial discussion is concerned, but pickleball is a relatively new thing, isn't it? I mean, has it been around all that long?
It's been around for a couple years, and I have a couple clients that talk about it. I've never played, in all honesty.
No, neither
but I know
have I.
it's a tennis court that they shorten, and you play with a paddle and a ball, and it's done as doubles, and so it doesn't require as much running. But it's an activity. You're outside, but I know a lot of the communities around Tucson have turned their old tennis courts into pickleball courts.
Yeah.
And in fact, I have a client that runs it for his HOA, and he's in charge of the leagues and stuff. So it is, a lot of people are starting to play that, which I'm all for. Anything that can get people outside doing something they enjoy, and it's an activity, physical activity, do it.
See, folks, I told you, Mark Silverman stays up with all the latest trends and all the latest stuff. So, I've never played pickleball either, but it sounds really interesting. 520-333-7601 is your number to call or text to Silverman and Associates, 520-333-7601. This is Saving with Silverman on the radio every week. Mark, another thing that you really have to face, we're talking about facing reality today, fewer people are actually quitting work cold turkey. You mentioned that earlier today, or earlier in this segment. You were talking about how some people don't want to retire ever, but others may just slow down or maybe go at it a little less hard than they have been.
Yeah, and I mean, I kind of touched on this just a few minutes ago, and I think, I'm certainly an example. I love what I do. I'm very passionate about what I do. I think people can probably understand that. I don't ever see myself, quitting or retiring. I may slow down a bit, but I don't see myself ever just totally quitting because I really enjoy what I do. And there's certain people that have those sorts of jobs that they enjoy what they do, and they never see themselves quitting as long as they're physically able to do it. And so I can certainly understand that from my own experience. But maybe you want to do something different. Maybe you want to try a different job, or you want to, spend more time, donating your time at a church or a charity, the Humane Society, whatever it might be. So, people are looking at second careers or even retirement careers where they want to do something totally different at a lesser scale. So they do have the time to go do the things that they want to do. And like I just mentioned, the work optional lifestyle, which is working because you want to, not because you have to. So people aren't just quitting cold turkey, although we have seen those people where they've come in and tell me that they've already given notice and can they retire? And it's, always the question as far as before we've run the numbers to make sure that they're going to be okay or not. We want to find out if they're going to be able to get their job back, if they're not okay, or what kind of trade-offs they're willing to make in order to have the retirement that they really want.
Gosh, I would hope that people would check out those numbers before they give their notice.
We encourage people to, but it's happened more times than I'd like to admit.
Yeah, I'm sure. The current investing environment for retirees is more challenging than it used to be. We discussed that a moment ago. It used to be people would work at one company for 40 years or whatever and have a pension, but these days that hardly ever happens, and it's just a different environment altogether, isn't it?
It is. I mean, we don't really see pensions, here, we have a lot of people we get from, who work at Raytheon, depending on how long they've been there. Some of them have pensions, some of them actually don't. And, if they're with the U of A or with the government, those people would have pensions. But we don't see a lot of those. A lot of times the only real income they're going to have is Social Security. And as I've said before, that shouldn't make up more than 25, maybe 30% of your overall retirement income. If you're relying more heavily on that, it's probably going to be a problem. So, it has become a challenge. This interest rate environment has been a big challenge for people. With interest rates so low, and we saw them, we're actually lower on interest rates now than we were at the beginning of the year. And, the Fed's increased interest rates a couple times this year, but we're still lower. And so that's created challenges. The days of, just living off your interest has become tough. It really has versus, even 10, 15, 20 years ago, it used to be possible. You got to have a lot of money saved in order to do that. So that's why we want to make sure if you're dipping into principal, which a lot of people are, that you're going to have enough and you're not going to run out before you pass on. So, it's those sorts of things and having the right mix of investments and those kind of things that we want to really understand, as well as your risk tolerance and all those factors. So it's just coming up with the right plan that's going to get you to and through retirement.
Mark, I know a lot of people listening out there today are thinking, I'm going to go ahead and make that phone call. What happens when they come in and have a conversation with you?
Sure, Ron. So, again, so whether you're a first time listener to the show or you've heard me for a long time, if anything I've said makes sense, resonates with you, this is now your opportunity to come in and have a conversation with me in my office to go through this process we call the financial physical. And I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets, and we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. This becomes the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with the CFP, such as myself, can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We try our best to help everyone, however, our slots do fill up quickly. So I can only guarantee a complimentary meeting to the next 10 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Mark Silverman's number is 520-333-7601. That is 520-333-7601. You can call or you can send a text to that number, and Mark will get back with you, and you can come in and have a conversation. It's not a sales meeting. There's no high pressure, nothing like that. You're not going to be forced into doing anything you don't want to do. You may become a client, then again, you may not. 520-333-7601. It's an informational fact-finding mission, and you can get to know Mark and vice versa. 520-333-7601 is your number to call or text. You're listening to Saving with Silverman. I'm Ron Stutz, along with Mark Silverman.
Planning for retirement shouldn't be a mystery. So why is it so easy to get bogged down with financial terms and advisors who try to offer you a sales pitch? At Silverman & Associates, Mark Silverman and his team take pride in looking after their clients' best interests. Schedule a complimentary review of your situation. Call or text 520-333-7601. That's 520-333-7601.
It's time to get to know Mark Silverman just a little bit better here on Saving with Silverman.
You're listening to Saving with Silverman. This is Ron Stutz along with Mark Silverman. And as we always do on this portion of the show, it is time now to get to know Mark Silverman a little better in our Getting to Know You segment. Mark, think about the Olympics. If you could turn any activity into an Olympic sport, what would you have a chance at winning a medal for? In other words, with which event would you win a gold medal, Mark?
Probably just, I don't even know how to even describe this, staying on top of all the changes going on in this industry, the financial services industry, and everything in between. I'm constantly looking. I attend a lot of conferences, and I'm on a lot of webinars, and always trying to find a better way for my clients as technology keeps evolving and systems and those sorts of things. So I always try to stay on top of what might be a good fit for my clients, and that sort of thing is probably what I would say. Technology is probably one of the bigger ones. We've come a long way with financial planning software, even risk evaluation software. And I'm always constantly looking to see, robo-advisors is probably the one that I'm looking at the most recently. And there's lots of different programs that are out there. Hasn't been perfected yet, but I think we're probably a couple years away. And that's something I'll probably look to with my clients once it's perfected. So I would have to say just being able to shift and keep not same old, but always looking for a better way for my clients. And I think that's one of the reasons why people work with me, is because that's what they're paying me for, because I have a fiduciary responsibility to look out for their best interests and not just, staying the same way. And if there's something better out there, letting my clients know that after I've vetted it.
Well, if you want to look at it this way, if you were a medical doctor, people would expect you to stay up to date on all the latest research and all the latest treatments and that sort of thing. And it's the same thing. You do a good job of adjusting to the changing times and rolling with the changes. So,
I think you have to. I mean, that's what people are looking for. Too many advisors are still stuck in doing business the same way that we did it, 20 some years ago. And unfortunately, things have changed, and actually things have changed for the better. Fees have come down. There's a lot more things that are out there. There's more transparency in our industry than there has ever been. So I think those are all good things.
There you go, folks. Getting to know Mark Silverman a little better, and I certainly think that if you are dealing with Mark Silverman, you are with someone who is on top of everything, who knows all the current trends and all that sort of thing as well. So you can have confidence in that. We'll have more on Saving with Silverman coming up in just a moment.
At Silverman & Associates, we understand that life can be expensive. There are bills to pay, and you might have loved ones you want to look after. With all those extra expenses, it's easy to neglect your own financial health. We want to make sure you'll be well cared for when the time comes. Keep listening to Saving with Silverman.
Welcome back to Saving with Silverman. I'm Ron Stutz. And if you'd like to find out more about Mark Silverman, all you got to do is go to the website, savingwithsilverman.com. That is savingwithsilverman.com. Mark, of course, is a certified financial planner professional, the president of Silverman & Associates, with an office in Tucson, but serving folks from all over southern Arizona. So if you would like to come in and have a conversation with Mark about your situation, this show is all about preparing you for retirement and making sure you have a good plan. And Mark can certainly do that for you. 520-333-7601 is your number to call. Or if you're more comfortable doing so, go ahead and shoot a text in this direction. 520-333-7601. One more time, that is 520-333-7601. Mark, a lot of people have trouble deciding exactly when to retire, even after they've decided that they might be able to retire. It's kind of a tough thing to figure out exactly when you can do it. I know you get a lot of questions from listeners who want to know how can they determine when it's going to be safe for them to retire. Do you find that most people are aiming for a certain retirement age or maybe even a certain dollar amount in their accounts?
I think the age is probably a better goal. I mean, as far as a dollar amount, I sometimes will get the question, even we've had it where they've sent those questions in that we've answered here. Do I need $1 million saved to retire? Again, it depends on what age you're retiring, what's your life expectancy, what are you going to be doing in retirement, how much money you're going to require, those sorts of things. So everybody's number is different, everybody's plan's different. And so, but if we have an age or a number that we're shooting for, that really can help, because then we could figure out based on life expectancy, let's say that we decide that you're going to retire at age 65. Then we know that let's say we figured out that my life expectancy is 93. So we know how many years we need income, and we'll do the inflation projections, those sorts of things, healthcare, all those sorts of factors, and really figure out how much money we need. And then we can take a look at the assets that you've saved and what income streams you have, Social Security, or if you have a pension, those sorts of things, and really determine, are you going to be on track or are you not on track? What we're looking for is, with a high level of predictability, is ensuring our clients knowing, hey, if you're going to retire at this age with this amount, here's what the numbers look like. And if those numbers work, great. If they don't, what can we do? What kind of trade-offs are you willing to make? Are you willing to work longer to have that type of income in retirement? Or are you, okay reducing your income number in retirement so you can retire on that certain date? It's those sorts of trade-offs, and those are the sort of conversations that we have to determine that once we say, hey, you're good to go, everything's been well thought of.
We're talking with Mark Silverman here on Saving with Silverman. And Mark, I know your planning process is called the Financial Physical. How does your process help people figure out when they can retire comfortably?
Absolutely. So I'm a certified financial planner, so we lead with planning. All of our clients have a plan, and that's what's important as far as understanding what their goals, objectives, their dreams are, and making sure that we can take those and see what's possible. We have a meeting where we talk about needs, wants, and wishes. And so we categorize and prioritize what those are. And so we'll list everything out, and then we can see what's achievable. In some cases, what we hope for is everything that you thought of, if you're married, you and your spouse want to do or is achievable. But in some cases, not everything is achievable. So we like to prioritize what's possible, what's not possible, and then we'll monitor the plan going forward. So, our process is based on financial planning, and we use software and have all the tools that we need in order to make sure that we're able to help our clients the best possible way. A lot of people, not just on the radio, but other advisors that I see, don't really have a process. Their process is to, look at somebody's investments and say, oh, we can do better. And they're just so focused on the investment management piece. They're not really looking at everything else. They're not looking at taxes. They're not looking at estate planning. They're not looking at the insurance, healthcare, all these other components which are part of somebody's plan. And so it's really a disservice because they're so focused on the, either selling investment or insurance products, whether it be annuities or whatever it might be, that they're not really addressing the client's needs and giving them the answers and helping them with the process and helping them make those decisions on whether, when should they take their pension, when should they take Social Security, all these sorts of things.
Well, let's say that you have a listener come in after today's show, sometime in the next couple of weeks here, and after they go through your planning process, they realize that they really need to keep working longer than they had anticipated. And I'm sure that's happened many, many times before. How have you dealt with that in the past?
Well, it's reality. And I tell people once we start the process with someone, hey, we're going to try to achieve all these goals, but I can't promise anything. There's no silver bullet in what we're doing. We're just putting the time and effort in and the guidance and the expertise to really try to help people and point them in the right direction, if you will, as far as pointing things out that were concerns and then also bringing up other areas that maybe they haven't thought about that have been concerns or issues that other clients have gone through. And so it happens, probably, I'd like everybody to be successful, and I like when somebody comes in for us to be able to do everything they can. I think most people have the idea that they understand that if they haven't really been saving, that maybe they can't retire the way that they wanted to, or maybe they can never retire. I have a couple right now that we're going through the process, and they're of the belief that they can't achieve what they're looking to achieve, and we haven't completed the plan yet, but it is, looking in that direction too, because of the fact that they've saved, but they haven't saved to the level that they should have saved in order to do all the things that they want to do. So, one of them is going to be able to retire, the other one won't be able to retire, and so but they understand that. And the worst thing that can happen, because we've come across these people too, where they already are retired and they're burning through their money. And the unfortunate thing is, it's hard once you've been retired to have to go back to work. Certainly to get your job back or old job back, but at least to do something once you've been retired. But the reality is we don't want to see people be financially unsuccessful. But if you're in a high risk of running out of money, as I've said before, and you've heard me say this, Ron, if you're going to run out of money, would you rather know today or right before it's happened? So you're better off knowing today, of course. And so there's things that we can do to get you through those things, whether it be going back to work, or maybe cutting back on some of the expenses that aren't necessary, maybe cutting back on the trips that you don't have to take, but are those sorts of things. But those are decisions that you have to make based on what you've saved.
Yeah. Here on Saving with Silverman, oftentimes I say, you may be in better shape than you actually thought you were. On the other side of that coin we were just talking about, tell us about somebody who was in better shape than they thought and was able to retire earlier than they had anticipated.
Sure. I'll say, I have a client that we just took on about a month ago, and they are retired currently, and we set down a bunch of goals and objectives, and I really, through our process, we lay everything out. We'll even talk about not just how much they need in retirement, but is there any special trips? I obviously, people are going to need new vehicles at some point. They want to give money to kids or grandkids. Is there a special trip, bucket list items? We really list everything. Not saying that everything's going to be achieved, but we want to put it all down and see what is achievable. And in their case, we listed quite a bit. In fact, the husband had told his wife, hey, I think that's enough. We've listed enough things. I said, no, if you have things, keep going. Let's list them. And what the great thing is when they came back after we had run our analysis, they were able to achieve every single thing that they had mentioned, even things that we put as wishes, which a wish is, it's certainly not a want, it's certainly not a need, but something that they'd like to do, but if it didn't happen, it's okay. But they were able to do the wishes as well. So that makes you feel good and made them certainly feel good. So we like to see those kind of stories.
Gosh, I know it makes you feel good when you're able to help somebody get that peace of mind, as they head into retirement. And that really is the reason you do this job. I know, Mark. If folks want to come in and have a conversation with you about their situation, whether it's great news they get or not so good news, but it's reality, what happens when they come through your door?
And the reality is what we're looking for. I mean, that's what people want is they want reality. They don't want somebody that's going to lie to them or give them misinformation.
Sure.
But I can tell you, you're going to have a better retirement when you can confidently spend that money and go do those things you want to do without worrying about if you're going to run out of money or not. And far too many people are just, out there working with advisors who just have sold them products where they have no idea whether they're going to have enough money or not. And that's not a good position to be in. So, Ron, just like you get a second opinion on your health, why wouldn't you get a second opinion on your wealth? So whether you're a do-it-yourselfer or already working with someone, this is now your chance to go through this process we call the financial physical. Do you know what your investments are costing you? If you're still working, are you on track to have the type of retirement you have always envisioned, just like we talked about? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle? I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. In this initial meeting, we'll address issues of importance to you, provide an overall view of your situation, and give some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware by now, I am a certified financial planner professional, and I believe the only one locally here in Tucson on the radio. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We do try our best to help everyone. However, our slots do fill up quickly. So I can only guarantee a complimentary meeting to the next 7 people that contact us right now. Please don't procrastinate because making smarter choices about your money impacts the quality of your life.
Call or send a text to this number, 520-333-7601, 520-333-7601. The important thing is to go ahead and get on the calendar because, as Mark said, these spots do fill up fast. So get a time arranged for you to come in and have that conversation, 520-333-7601. It won't be painful. There's not going to be any high pressure. It's just a conversation, kind of a getting to know you session, and a good assessment. It's like going to the doctor. He's going to take out the old stethoscope and listen to your heart beating. The same thing with your finances. Mark's going to check everything and make sure everything is good, and then talk with you about what your hopes and dreams are for your retirement. 520-333-7601. Your number to call or text. You're listening to Saving with Silverman. I'm Ron Stutz along with Mark Silverman, and there's more coming up on today's show in just a moment.
Picture this. Your financial statements have come in the mail. What's going through your head as you open them up? Maybe all that financial jargon is flustering. Maybe the numbers are confusing, or maybe those red arrows are leaving you in a funk. Don't base your future on a monthly letter. Keep listening to Saving with Silverman. Learn what true financial planning really looks like.
Welcome back to Saving with Silverman. I'm Ron Stutz with the star of our show, Mark Silverman, the president of Silverman and Associates in Tucson, serving folks all over the southern Arizona area. Mark, you've heard us say many times on the show, is a certified financial planner professional. He is a fiduciary. He has your best interests at heart. And if you'd like to come in for the financial physical, no cost and no obligation, call this number or send a text to this number, 520-333-7601. That's 520-333-7601. You can also check out Mark's website, savingwithsilverman.com. But again, that number is 520-333-7601. Mark, let's talk about safe money. A lot of people like to talk about save money. Seems that people have different definitions of save money and exactly what it is as it relates to their savings. What are some different ways that you see people defining save money?
Well, and then there's actually shows here in Tucson that have safe money in the name. And basically all those people are doing, they're insurance salespeople who are just virtually selling annuities to everybody, which if you've listened to this show, I'm not personally a fan of putting all of your money into annuities. But, I think safe money can mean different things. I think safe money is money that doesn't have a risk associated to it, so it has a guarantee associated to it. As we mentioned earlier in the show, though, interest rates are near all-time lows. And so the problem is if you put stuff into safe money, you aren't keeping up with inflation. And we use 3% inflation. So even in the most conservative portfolios with our clients, we shoot for at least a 3% rate of return net of all fees and expenses. If you're not doing that, you're not maintaining inflation over the long term. And so, if you're keeping too much money in cash or under the mattress or, buried in your backyard or in annuities, I think it could be a problem. I think people need enough liquidity and people don't want risk, but there's a trade-off. And so it's really understanding the risk return trade-off for people. And so we really try to help people understand that. And I'm not saying you should take all of your money and put it into safe money or that sort of thing, but you need to have enough emergency funds, which for most people's 3 to 6 months worth of expenses. And for a lot of our retired clients, we'll even go even more conservative and put 12 months worth of expenses. But it's important that you have enough money you're able to get to without fees, penalties, expenses, surrender charges, that sort of thing. But the rest of it you need to have in something that's going to grow and at least keep pace with inflation. And for a lot of people, they want more than just that. They need some growth out of it as well.
So different people define safe money in different ways. What's your definition of safe money?
My definition of safe money is money that, again, has a guarantee to it. What a lot of the people on the radio, particularly the insurance people who are selling annuities, who name their shows after safe money this or safe money that, they're basically just pushing annuities. And so they're saying, the market's going to crash, put all of your money into safe money. And really, I don't think that's the best strategy. Can those products work? They can in certain circumstances, but I wouldn't use it for growth. I think they could work for income purposes, but I wouldn't be using them for growth purposes. So, I think everybody's situation's different, but that's my definition, is anything that has a guarantee to it. But with interest rates the way they are, you're getting a guarantee, but you're not getting a lot of return on your investment.
Here's a tricky question here, and I think I know what the answer to this question is going to be. Mark, do most people have an accurate understanding of how much safety and risk they have in their portfolios in the first place?
They really don't. I mean, we've been in this bull market since 2009, so it's the second longest bull market we've ever had. And so, I'm starting to see people taking a lot more risk. Greed's coming into the picture because everybody wants a piece of the action, kind of like I saw back in, pre-07, before we took the market corrected in late 07. Mm-hmm. Everybody wanted to be in the stock market because we had a long run. And so we're starting to see that kind of attitude with a lot of people. But, part of our process that we do is we do a great job of understanding and trying to understand our clients' risk, which is, downside risk, how much volatility they're willing to handle, how much loss they're willing to accept in order for a return. And so we're able to show them, and we can actually take their current portfolio without even moving assets and plug it in and show them how much risk is actually in their portfolio. And we see about 80% of the people that we're coming in contact with are taking more risk than they realized they were taking. And we can show them, back test it and say, hey, if we do have another correction like we had from, financial crisis, late 07 to early 09, here's how much you will stand to lose staying with what you have. So does it make sense to maybe reevaluate it? If you're in retirement, certainly. If you're within 5 years of retirement, it's something you probably want to consider. If you're 10, 20, 30 years away, maybe it's not something you have to worry about because it will correct at some point and it will come back at some point. So, but if you're in retirement or pre-retirement, it could potentially be a big problem.
There are so many people, as we talked about so many times on this show, that have no idea what kind of risk they're taking in their portfolios. Why do you think it is that so many people are misinformed about the safety of their savings?
I really think that people just don't understand. It's not explained to them. So whether they're doing it on working on themselves, do it yourselfers as we call them, that the onus is on them. But if they're working with an advisor, the onus unfortunately is still on the client as well. But maybe the advisor hasn't done a great job of advising them or explaining things to them. They've been more involved with just selling, and don't understand the downside. They may be focused on the upside, which unfortunately is how most people sell products, is focusing on upside, not explaining the cons, but more the pros of the particular investment product. And so I think people don't really have a good take on understanding as far as how much they need in savings and how much is too much in savings and how much is too little. I've seen people come in where they don't have enough liquidity. And it's a problem, especially if there's penalties to get out of where they're at. But they need enough liquidity, especially here, if air conditioning breaks here in Tucson in the summer. You can't survive in Tucson without air conditioning or some type of swamp cooler in the summer months here. It's a big problem. I know it's not in where you are, Ron, but here it's a big problem. And you need to have money to pay for that. And so things do come up, and you need to have enough liquidity to cover those sorts of things.
Mark, can you give us an example of a client who needed more safety in their portfolio and how you were able to help that client? And how were they allocated before meeting with you, and what kind of changes did you suggest?
Sure. I have a client right now, a new one we just picked up last week, and we're still in the planning process, but we have going through their statements, and they're both retired, and they are 100% in equities. They're currently with a firm out of California that doesn't believe in bonds, and they are 100% equities. We haven't done their risk tolerance. We're in the process of doing that, but they've explained to me where they are, and they're spending way too much out of the portfolio. I mean, they're going to be out of money, assuming there's not a lot of growth. Simple math tells me they'll be out of money in 10 years, which their life expectancy is certainly longer than that. And so, again, we haven't done it yet, but they're basically, I said, you're all in stocks. Is there a reason for this? They said, well, our current advisor doesn't believe in bonds, which is, to me, is crazy. So I told them, I said, all my retired clients have some type of fixed income in their portfolio. They're not 100% equities. The clients that I do have in 100% equities are clients that are much younger, who are 10, 20, 30 years away from retirement. So, again, everybody's situation is different. We haven't done the risk tolerance yet, but I can imagine once they do the risk tolerance, we're going to come back and say, here's the portfolio you should be in, and you shouldn't be pulling this much money out of your portfolio because of the fact that, you're going to be running out of money. We're going to illustrate that for them by doing a plan, which they never had a plan before. Their advisor, I told them, their current advisor has just been telling them that they're fine, they're not going to run out of money, but they don't have any documentation of what that's based on. It's all verbal, which that's not good enough. I'm sorry.
Saving with Silverman listeners are out there right now thinking, I'm going to go ahead and make that phone call, come in, get to know Mark Silverman, have him get to know me, what my hopes and dreams are for my retirement plans. And, everybody wants to achieve peace of mind, and everybody I know is really worried about outliving their money unless they have a plan. And Mark, what happens when those folks come in and sit down and have a conversation?
Sure. So whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your chance to come in and have a conversation with me. I don't pawn you off on somebody else. Here in my office to go through this process we call the financial physical. I can assure you I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. This becomes the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware by now, I am a certified financial planner professional and the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We do try our best to help everyone. However, our slots do fill up quickly, so I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. Call or shoot a text to that number, 520-333-7601. That'll put you in touch with Silverman and Associates. Mark Silverman, of course, is the president and your certified financial planner professional. Call that number or text to that number, 520-333-7601. And you can come in and have a conversation, get to know Mark. He can get to know you, find out what you want out of retirement. People have different thoughts about what their retirement's going to be like. You want to sit around and just watch television or sit on the porch and watch people drive by your house. You want to travel, you want to see your grandkids or whatever the case may be. Everybody is different. Call that number and you can come in and have a conversation about it. 520-333-7601. You're listening to Saving with Silverman. I'm Ron Stutz along with Mark Silverman.
Mark Silverman is a lifelong Arizonan, and his firm is based right here in Tucson. When you come in for a visit, you can expect someone who's familiar with your community. At Silverman and Associates, our relationship with you is most important to us. We want to build you a financial plan that's unique to your goals. No generic products, no corporate red tape, just friendly folks looking to give you a comprehensive approach to retirement planning. Come in for a visit today and let us help you build a meaningful retirement. Call or text 520-333-7601. That's 520-333-7601.
Mark Silverman is a Tucson native, and his firm is right here in town. That means he's always accessible to you. Start your relationship with Mark and his team today. Keep listening to Saving with Silverman.
You're listening to Saving with Silverman. My name is Ryan Stutz. I have the pleasure of hanging out with Mark Silverman a little bit today. Mark, of course, certified financial planner professional, the president of Silverman and Associates. If you'd like to call or text to get in touch with Mark's office and to maybe come in and have a conversation about your situation, then your number is 520-333-7601. That is 520-333-7601. As I mentioned earlier, you can call or text if you like, if that's more comfortable for you. 520-333-7601. It is time for you to tell us a story here today, Mark. Tell us about a time when you helped someone get their financial plan in good order after a divorce. I'm sure you've dealt with that a lot.
I have, and it's always tough. I don't care which side you're on, if you're the one that wanted the divorce or not. It's tough on both sides. And just so you know, I mean, when somebody goes through a divorce, you have to, if you've been working with an advisor as a couple and you split off, the advisor is not supposed to be working with both sides any further because it's a conflict of interest. So typically one will look for the advisor, maybe one stays with their old advisor. So I've been on both sides of it. Where the person that was managing the finances, is looking for a new advisor, or the one that wasn't is starting to look for a new advisor. I would say the most recent one is I had a woman in this particular case who wasn't handling the finances, and so she had to leave the broker. Her ex-husband was the one that was staying with their former broker. And so she was looking and needed guidance and education. There was quite a bit involved because she really didn't even understand. Of course, it's tough enough to go through a divorce. Now she had to envision life on her own and making sure she had enough money and that sort of thing. And she was already retired too. And so, just explaining what she had and what kind of investments we needed to make some changes to the portfolio to really deal with. She needed some more income because she wasn't needing the income before because the way it was set up. So she needed more income, those sorts of things, and looked at life differently now, being on her own. So just really understanding exactly what she had, showing her and running a plan and showing her exactly how it was going to work and and how she was going to be okay and didn't need to go back to work and that sort of thing. And we were able to shift some things, and she's doing better now. She's been a client for, I want to say, about a year and a half, maybe 2 years. I'd have to check, but somewhere in that range. And we've got everything kind of structured the correct way. Happy to report she's actually has a new friend, no marriage, but somebody she's spending time with, and life seems good.
Yeah. Well, I'm sure that, if we had the time, you could recount many, many stories like that of folks you have helped through after a divorce situation and get their act together, help them on the way to financial freedom and looking good for their retirement planning. And Mark, you do a great job on all that kind of stuff, and I always love hearing those stories. You're listening to Saving with Silverman, and again, Mark Silverman, the president of Silverman and Associates, serving Tucson and the entire southern Arizona area. The number to call or text is 520-333-7601. If you'd like to have a conversation with Mark, 520-333-7601. Get the financial physical. Make sure that Mark can put your portfolio through a financial physical to make sure it's up to the test to survive and thrive in your retirement years. And that's what we all want. We'll have more coming up on today's edition of Saving with Silverman in just a moment.
Life is complicated. It's full of twists and turns and complex issues. The last things you need when planning your financial future are confusing numbers and advisors who just offer you a sales pitch. We believe there's a simpler way to invest. Your financial plan should be built on a plan that's made just for you. It's all about discovering your goals and designing a strategy that will help you get where you want to go. And don't worry, we'll track your progress along the way. Stop wandering your way through your investing life. Come in for a visit today. To schedule a visit, call or text 520-333-7601. That's 520-333-7601.
You finished school and worked hard to get your first job. You told yourself you'd save for retirement, but that old jalopy you bought when you were 16 broke down, so you bought a new one. You started to save, and soon you bought your first home. Then came pets, kids, and your world changed some more. You worked hard to provide for your family. You made sure your kids got a good education. You might be sending them to school right now, or maybe it's the grandkids' turn. And of course, you're now making sure your parents are looked after. Through the years you lovingly sacrificed for your family, now it's time to take care of you. Love others well by taking care of yourself. Keep listening to Saving with Silverman to discover how to build a financial plan that'll continue providing for you and the ones you love for years to come.
Welcome back to Saving with Silverman. I'm Ron Stutz along with Mark Silverman at Silverman and Associates in Tucson and serving folks all over southern Arizona. Mark, over the years, has helped so many individuals and so many couples, so many families, different generations now, more than one generation. 520-333-7601 is your number to call, or you can send a text to that number if you like. A lot of people find it more convenient to text. 520-333-7601. One more time, that is 520-333-7601. Mark, it's time now for the request line, and we have some great questions that have come in today. First of all, Lou in Oracle says, I've always assumed that I'll be in a lower tax bracket in retirement, but now I'm questioning whether or not that's actually true. What do you normally see?
Well, Lou, that's a terrific question. When I started in this business in the mid-90s, we were told to tell people, you have an IRA account, you get the deduction now. When you start having to take your money out in 70 and a half, you're going to be in a lower tax bracket because you're not going to be working, that sort of thing. What I've come to realize is that's not necessarily the case, because chances are your house may be free and clear, so you don't have a mortgage deduction there, interest deduction. The kids are gone, so you don't have that deduction, so you don't really have a lot of deductions. And Social Security can be taxable depending on your income, or if you've done a good job saving with your other investments, if you have a pension, etc. So that's not necessarily the case, and a lot of times people can be just in the same tax bracket, if not even a higher tax bracket, in retirement than when they were working. And so I don't have that same belief anymore as what I was taught when I started in this business, but you're absolutely right. So, there's things that we can do as far as some tax planning, depending on what age you are and where you are as far in retirement. But that's, I think you're right on track, and what you're realizing is a reality, unfortunately, for a lot of people.
Okay, thanks a lot for the question, Lou, and hope that helps. Mary in Tucson has a question. Mary says, I'm really worried about rolling over my 401k because I'm afraid that I'm going to do something wrong and create a big tax bill for myself. Mark, how difficult is this process?
Well, it's not difficult if it's done correctly. So you want to make sure you're working with a reputable company that knows what they're doing. If it's rolled over correctly, there should be no withholding of the money, assuming you're not taking any of it to spend. But if you're just rolling it from a 401k, and this could be true for a 403b, a 457, we're doing one now, we're a TSP, a thrift savings plan. We're in the process of doing another one of those. So depending how these are done, if it's done correctly, it rolls over from one of those plans, in your case, a 401k, directly over to a traditional IRA. And so there's no taxes due, nothing's withheld, all that sort of thing. So it should be a pretty seamless process, assuming the paperwork's done correctly. It should be done as a transfer. You can do it as a rollover, but you're better off doing it as a transfer. We can explain when you call, or if you call us and we can explain further, but that's how we do it here. But it shouldn't be a big problem. If you're concerned about rolling it over with somebody else and maybe they're not doing it right, that might say something that you're not too thrilled with maybe how that process is going, or maybe there's some questions regarding the advice that you're being given. But we're certainly happy to help you if that's something that we can do. Certainly call us with questions. Great question, though.
Two good questions from Lou in Oracle and Mary in Tucson. And now we have a really interesting question here from Murray in Saddlebrook. And Murray says, he probably reflects the feeling of a lot of folks right now with this question. He says, the market has to crash soon. It just has to. Am I wrong about that?
Well, Murray, it's a great question, and not to scare people, because there's plenty of those shows on the radio that are trying to scare everybody to get out of the market because of the fact that they're trying to sell a product, i.e. annuity, et cetera. And so I think what you have to understand is you should be taking the amount of risk that you're comfortable taking. Yes, we are in the second longest bull market we've ever been in. So with that being said, logic would tell you that we are due for a correction. I don't know if it's this year or next year, but what I can tell you is we're one day closer each and every day. And so it's just really understanding now's a great time to reevaluate your risk tolerance and your investments, and making sure those two are matching up along with your goals and objectives, and making sure that you're on track, the risk that you're comfortable taking, you're able to achieve your goals and objectives, whatever that might be, whether you're already retired or aiming to retire at a certain age. So if all those things are working together, that's really a good time to do this. And I urge everybody that's listening, and that's why this is such a great question, to really reevaluate your risk and see where you're at compared to where your investments are at. And again, if you're 10, 20 years, 30 years away from retirement and you're listening, I wouldn't be as concerned. But if you're within 10 years, certainly within 5, or already retired, now's a great time to reevaluate your risk tolerance and your comfort level regarding and compare that to your investments, and making sure everything's on track.
Well, gee, if you had a crystal ball, you could tell folks exactly when the stock market was going to have a crash or whatever was going to happen, but you don't have one, and nobody has one of those. So, that's why you have to be smart about these things and have a plan. Saving with Silverman, you can get in touch with Mark Silverman. I'll give you the number in just a moment. But, Mark, when folks decide to go ahead and make that phone call and come in and sit down and talk with you about this, about their retirements, what do you have to offer those folks?
Sure. So, I just answered those 3 questions. And if you have questions you'd like us to answer, certainly go to the website, savingwithsilverman.com, and you can submit your questions on there. But, here's a simple question I'm going to ask you. And can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with so many of my clients that become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? Is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and diversification and insurance and estate planning and healthcare? Are you having those annual reviews? But hopefully it's more frequently than that. Is there detailed follow-up? Is there accountability? If you are, if all that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you will be shocked at what you'll learn, and this won't cost you anything. Give us a call at 520-333-7601. That's 520-333-7601, 520-333-7601.
You can call that number, or you can send a text to it, whatever you prefer, 520-333-7601, 520-333-7601. That'll put you in touch with Mark Silverman at Silverman & Associates. Saving with Silverman, because making smarter choices about your money impacts the quality of your life. Thank you for listening today. And Mark, it's been great being with you again.
Ron, I'm happy to always be here, and I want to thank everybody for taking time to listen. I hope you got some value out of this week's show. And again, stay cool out there and drink plenty of water.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.